Some breaking news here. Wall Street gets what it wants. The winning streak extends to 3 days now. Greece's parliament passes the first of two key austerity bills. So the S&P 500, which was up only 1% for the year at the start of this week, get this, now back above that key psychological 1,300 level.
So is the overhang from the Greek debt crisis finally behind us? Even though it's not really over, we know there is another vote tomorrow. John Thomas Financial CEO Tom Belesis, a Greek himself, says he's relieved. But economist Peter Marisi says with U.S. growth and the housing industry is so weak at the moment, you saw the home builders today, it's starting to smell a lot like, do I dare say, Lehman Brothers all over again? Okay, Peter, I'll get to you in a minute, but I have to get to Tom. Tom, we're looking at the situation in Greece today where there was a vote. They did pass the austerity plan.
That's correct.
And then these guys are still building bonfires outside the parliament. I mean, these little pathetic things, but it's serious enough. Do you believe that this issue is behind us now?
For the short term, yes. I think the first reaction anyone can have is relief. But overall, longer term, Greece has a major problem, and they have to react and adapt to the current environment. I mean, the government is raising taxes on a shrinking economy, which eventually is going to make the economy worse. So short term, it does definitely address the liquidity issue for Greece and diffuses the notion that a default is in place, which gets now to the marketplace, which investors wanted to see that because now they're going to focus on earnings. And if earnings do come in line, stocks at these levels look very cheap, and it could be a good trade for investors at these levels.
So are you confident then that this Greece situation, we do have the key vote tomorrow, but will it stabilize the economy of the Eurozone and really curb the fears of contagion that we have for the rest of these markets?
I think short term, the austerity measures help Europe, not Greece. But we need it to help Greece overall longer term because we don't want it to spread. And if it spreads, it'll become, a devastating impact to the overall global economy. But I got to tell you now, the Greek government is a great example of political cronyism, and I'll tell you what I mean by that. You got railroad workers, earning 4 times in salaries than total ticket sales. You got retired workers receiving 96%,
honestly,
of their salaries. That's more than double in Germany. So short term, yes, it's good, but over a longer term, there's still issues out there.
Who do they think they are, the MTA? Dr. Marisi, let's get right to you. You say that this has the potential to become another Lehman Brothers. Now, that is a very strong and bold statement. We know that Lehman going under unwound many different positions and really hurt our situation here, but also globally. Why do you think Greece, where it appears there may be a meeting of the minds and some bridging of gaps over problems, could do the same thing?
Well, it's sort of like you're building a bridge 100 feet out on each side when there's a 600-foot chasm. This is a Band-Aid. Greece is going to have financial problems again next year, the following year. Quite simply, growth is going to slow. The tax revenues aren't going to be what's expected. Moreover, there's a lot of privatization in this plan, and Greece is having trouble moving the properties. We haven't seen the private bond rollovers materialize yet, and whether that will trigger a default call by the rating agencies. It could trigger swaps with U.S. bank payouts there. So, if those things happen, they're manageable if it's only Greece. But then if the uncertainty spreads to Portugal, Spain, and so forth, it gets big enough that it uncorks, and they haven't really solved the problem. Greece is going to have more liquidity problems next year and the following year.
Tom, you take Greece out of this situation, looking at the U.S. bond market, a lot of the pile-in to U.S. treasuries has been this flight to quality. So now that Greece isn't a factor, and we have our own debt and deficit issues here, do you think we're going to start to see U.S. yields come up?
I think
they already have today.
They have. There's definitely some headwinds that are on the horizon, like this debt issue with the government, what's going on with the GOP. But I think people can focus on second quarter earnings. If you look at earnings have been rising, not decreasing.
Nike looked great.
Absolutely.
With higher costs on Nike, right, Liz?
Absolutely.
Demand, strong demand for
That's right. And you know what? If earnings do come in at just meeting expectations, stocks are going to look very cheap. We don't want to distract investors from everything that's going on here and globally with what's going on in Greece, because Greece now is a side issue. Focus on earnings. I think there's a good trade here for investors.
You know what, Pete? A year ago, you had BP just suddenly becoming a little bit more palatable to deal with. I mean, I don't think we had even capped the spill at this point. Today, Chevron still trading at a price-to-earnings ratio of 7, which, folks, that's a fancy way of saying it's pretty cheap, up 46% year over year. Isn't now, when there is fear, the time to actually get into equities? And you got bullish a couple of weeks ago right here on the show.
I think if you can keep Greece glued together, we get some kind of deal on the budget, focusing on earnings is the place to be. As long as the economy keeps on growing, and there are questions with regard to that, but as long as it keeps on growing, there'll be enough profits in the United States because productivity growth remains so strong. And this president is going to have to relent on regulation if he wants to get reelected. You put that together with reasonable growth in Asia. China doesn't grow 10% a year, but profits to grow a lot. So I put money in the market last week when things were down.
Gentlemen, a wonderful discussion. Thank you both, Tom Belesis and Peter Marici.
Thank you very much.
So the relief
Take
in
care.
stocks not carrying over into the oil markets. NYMEX crude shooting way up